Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 19th of July. We have a busy week ahead of us, which starts with quiet economic calendar on Monday. On Tuesday, we should be on the lookout for People Bank of China interest rate decision and RBA meeting minutes. Going forward, Bank of Japan meeting minutes and also Japanese trade balance data, in addition to US crude oil inventories, will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for European Central Bank interest rate decision and press conference. In the afternoon, we should be on the lookout for US jobless claims data. The week will finish on Friday with UK retail sales figures. Also, UK, Eurozone and US services and manufacturing PMI data, and Canada retail sales is due. The US earnings will continue with companies like IBM, Coca-Cola, Netflix, Snap, Johnson & Johnson, Halliburton, Verizon, Intel, AT&T, and American Express. Now, let's take a look at few markets. Okay, let's start with the Bitcoin. Bitcoin is consolidating sideways, nothing new. This is almost a second month of sideways consolidation. Key trading level going forward is at 33,600 on the upside from the intraday point of view and 30,000 to the downside. Either a breakout above 33,600 could open the way for a potential spike higher, retest of this falling resistance trend line towards 36,800, call it 37,000. Only an end of day breakout above that level could open the way for additional spike higher, targeting 40,000. Alternatively, if we see a rally into 33,600 and a rejection, or a gradual move lower and a loss of 30,000 and an end of day close below that level, that could open the way for a deeper corrective pullback towards 27,200, possibly even 26,000 to the downside. This is DAX or German 30. We had a corrective pullback on Friday and a loss of key intraday level at 15,600. We have rising support trend line and also a fib retracement at 15,400 to the downside. Pullback to that level and a rally could open the way for the continuation of this uptrend, potentially opening the way for the retest of 15,600, possibly even 15,700, cluster of these previous highs, and 15,840. Alternatively, if you see a sell-off and a loss of 15,400, a retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective pullback, targeting additional support at the cluster of these lows of 15,300, possibly even 15,150, 15,100 to the downside. Nasdaq is clearly uptrending in end of day time frame, supported by multiple rising moving averages and also multiple trend lines. This is the intraday chart of Nasdaq, and we can see that Friday's pullback appeared to be a retest of support, and now retest of that support as a newly found resistance and a corrective pullback lower. Key trade level going forward to the upside is at 14,750. A rally into that level and a rejection or a loss of 15,600 could open the way for a deeper corrective pullback towards 14,400. Alternatively, if we see a rally into 14,750, possibly even 14,800, break above that level and end of day close above that level could open the way for the extension to the upside, targeting additional resistance at 14,950, 15,000 once again. Euro dollar going sideways with the slight bearish sentiment here, intact sequence of lower highs. We can draw a falling resistance trend line. Key trading level going forward is at one spot 1850, this area here. Rally into that level and a rejection, or a gradual move lower, and a loss of these current lows at 1.1770 could open the way for a deeper corrective pullback, continuation to the downside, targeting 1.1750, 1.17. Alternatively, if we see a rally and an end of day close above 1.1850, that could trigger oversold bounce back, targeting additional resistance at 1.19, 1.1920, possibly even 1.1950 to the upside. Sterling dollar, very similar chart, sideways with a slight bearish sentiment still intact, sequence of lower highs. There is a falling resistance trend line which is capping the price. Key trading level is at 138.50, this area here. A rally into that level and a rejection or a gradual move lower, and loss of these lows at 137.30 could open the way for the continuation to the downside, extension towards additional supports at 136.87, 136.50. Alternatively, if you see a rally and an end of day close above 138.50, that could trigger an extension to the upside, targeting 139, cluster of these previous highs from the 10th of July. Only an end of day close above 139, possibly a retest of that level from above as a newly found support, could trigger oversold bounce back higher, short squeeze, targeting 139.50, 140. Dollar Japanese yen, we had support, loss of support, and now textbook retest of that support as a newly found resistance and another leg lower. Key trading level going forward is at 110.50. As long as that level holds, intraday shorter term bears are in charge, potentially indicating a deeper corrective pullback towards 109.50, 109.30, possibly even 109, 108.60. Alternatively, we see a rally and an end of day close of 110.50, retest of that level from above as a newly found support. This would only be a consolidation pattern which broke to the upside, potentially targeting 111 again, 111.50, 111.60, possibly even 112. Gold corrective pullback on Friday, still slightly bullish because this looks like a divergence that we talked about over the past several weeks, with price making lower lows and stochastics making higher lows, and then we saw this oversold bounce back higher. Key trading level going forward is at 1800, psychologically important round number. Pullback to that level and a rally higher, or a rally from these levels and a breakout above 1830 could open the way for the continuation to the upside, targeting additional resistances at 1850, 1870, possibly even 1900. Alternatively, if we see a push lower and a loss of 1800, an end of day close below that level, that could trigger a deeper corrective pullback and retest of really important support as a neckline of this double bottom towards 1790. Crude oil is consolidating sideways in something that can be described as a coiling price pattern. These type of price patterns have the tendency to break to the upside, and they tend to do it on the third touch. So first touch, second touch, third touch would be up here towards 73.60. A rally from the current lows and a breakout above 73.60, our key trading level, could open the way for the extension to the upside. The distance from this widest point of consolidation can be added at the breakout to project potential upside resistances, initially targeting this swing high here at 76.90, call it 77, breakout above that level in 78.79 or higher. Alternatively, if we see a push lower and a loss of these lows at 70, which is psychologically important round number for crude oil, 70, loss of that level, retest of that level from underneath as a newly found resistance, that could trigger deeper corrective pullback, targeting additional support at 67.50. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.